Gentlelady yields back. The gentleman from Georgia, Mr. Scott, who's also the chair of the House Agriculture Committee, is now recognized for 5 minutes.
Thank you very much. Perhaps the most paralyzing issue in this that we can address quickly with coming up with some answers deals with student loan debt. And Mr. Greer, I have looked at recent data from the Student Borrower Protection Center. You may be familiar with that. It shows a widening gap between private student loan usage and outcomes between Black and white borrowers. Black students, it says, are 4 times as likely to struggle in repayment of private student debt in comparison to their white peers, despite being less than half as likely to take out a private student loan. That's why I say the student loan issue is one, and I might just refer to some of the comments from the other side. But this is a very serious racial issue. The impact this has on a young borrower's credit score can have significant, it does, long-term consequences, such as making it more difficult to get a job, buy a car, own a home. This is a paralyzing issue. So, Mr. Greer, I found it interesting in your testimony. Here's what you said. You said that the current system overlooks many in our community because their monthly expenses do not go toward a more traditional credit product like a home or a credit card. They don't have them. And penalizes consumers for holding less traditional credit products or bad debt, such as unpaid student loan debt. So, Mr. Greer, can you explain why unpaid student loans, particularly private student loan debt, even when a borrower is current on that loan, is viewed by creditors as bad and continues to be used as a driving factor in limiting credit worthiness, especially for Black borrowers, 4 times as great? Mr. Greer.
Well, thank you, Mr. Scott, for that question. It's such an important issue, and I do want to acknowledge the work that Demos has done on student loan debt and raising up those racial disparities that you talked about, Mr. Scott. I mean, it all comes down to, the credit bureaus treat student loan debt because it can't be offloaded through bankruptcy, in the worst case, more harmful in their algorithms. And I'll give you a little anecdote of my own. My wife and I wanted to buy our first home. And this was, about 15 years ago. And we were working with our mortgage lender. And they said, you know what? And they were like, you know what? I could get you a better rate if you make a huge payment to your student loans. Well, we didn't have a lot of money. That came out of our savings. We had to pull that money out of our savings. And so we had to make a choice between pulling money out of our savings would have went into the home equity of the house versus making a payment to a student loan company in order to get a better interest rate. Those are the type of difficult decisions that these credit bureaus place for consumers, is that and actually cuts at the wealth of people who are in the housing market, or people who are looking to start a business, or many of the other wealth building activities that people need access to credit for. So thank you so much, Mr. Scott, for raising this, because it's such a critical issue and a huge problem within the system.
Thank you very much.